Hi, everyone, and welcome to this week's version of Mish's Market Minute. I am your host, Mish Schneider, and thank you again to StockCharts TV for allowing me this platform each week to show you how I'm thinking about the stock market, certain picks, certain themes. And today, in that line, we are going to cover a couple of themes here. One is going to be part lesson, which is based on the 50 and 200 week moving average. A lot of people, particularly more active traders, tend to focus on daily moving averages anywhere from a 5-day, 10-day on up to a 200-day. Some even look more at exponential moving averages. Some people like to look at the minute charts or the 30-minute chart moving averages. But I got to tell you that if you don't have an idea of how to use these weekly moving averages, then you are missing sometimes the macro and looking at the market or a particular instrument myopically. And there are so many examples of that look like they're breaking out and then they fail the breakout because something's been going on a longer term trend. And that's really where I like to use these moving averages. But I also, since we're still in the middle of earnings seasons, or maybe more towards the end, I've got some earnings picks to look at. And also, since now all of a sudden, and you guys know who've been with me forever, that I have been talking about inflation and stagflation. My God, if you look back to last year, I started making videos on that. Now that it's on the lips of everyone, of course, you're seeing huge sell-offs in some of the commodities today. That could be an interesting buy opportunity. We will take a look at some of those. I may even want to add a couple of symbols if we have time. So let's get started. So essentially, the reason why we're looking at the 50 and the 200 week moving average is based on what we do for the daily, which is phases. And at MarketGauge, we like to use 6 phases. Everyone, of course, knows about the bullish and the bearish phase, but there are these in-between phases, and a lot of that can be told not only on the daily moving averages using the 50 and the 200 daily moving average, but also on the weekly moving averages. And obviously, I don't have the time during this segment, and I want to give you more actionable stuff to go through the entire theory behind it, but I do have a book, and you can see that Martin here is holding up my book. It's called Plant Your Money Tree, A Guide to Growing Your Wealth. And so it's available in Audible. It's available as an ebook, and also available if you go to www.marketgauge.com/plant your money tree. And if you're watching this on YouTube, there will be a link. So what makes that so important, those 50 and 200 week moving averages, is that not only do we gauge these phase changes, but we also can really see continuations of trends or a breakout, the stop of a trend and reversal, a breakdown. And then sometimes when something just retraces to the major moving average and gives you a good opportunity to get in with a very, very low risk. So from there, I'm going to pick a few stocks to look at for earnings, and like I said, and then go into a review on commodities. And of course, I always like to tell you the symbols I covered. I also think I may add here something on the agricultural's DBA, so I will add that after the fact. All right, let's get going. So it says here gold, but we're going to start, because remember, we're starting here with the lesson on the weekly chart. So all of these charts right now that you're going to be seeing today are weekly charts. So this is Altria Group. It's consumer staples, it's tobacco. And actually, it really started with the blue line here and the 50-week moving average. It's gone up and down, but not only do we look at where the price position is on the moving averages, we look at where the 50-week is relative to the 200-week. In this case, it's below it, but we also look at slope. So in the situation here of slope, you can see that we've had a declining slope in the 50-week ever since we broke it back here in January 2020, of course, before the pandemic. And that slope has continued to go down. And we had one little blip here where it was above. So you might have been involved here based on the 50-week. But the whole idea of using these weekly phases is that you know right away you're wrong. So let's say you bought it here on this week or even this week, you would have had to stop under and you would have lost a little bit money. The idea is not so much that you're guaranteed to make money, but if you know how to probe using the slope and the confirmation, when you get it right, you could make a lot of money. And you could see what happened here as the slope continued down. But as it started to turn up, so did this. And then eventually it took out the 200-week moving average. But the 200-week is also sloping down. So does that mean I would get involved right now? Probably not, especially as the rest of the market is selling off, but I would certainly keep this on my list of stocks. And what I always like to tell people is that the technicals often precede the fundamentals. So what happens? Why would tobacco, so unpopular, become something that we may want to buy? Well, very simply, Altria and some other big tobacco groups have made huge investments in the possibility of a cannabis legal situation. Right now, that's not on the table federally, but it has been mentioned. So this might actually take off, and then you'll find out something like that happens and these tobacco companies get a home run. Also interesting is that the 50-week here is starting to accelerate close to the 200-week. And over the course of time, this could actually wind up in a golden cross. That's when the 50 crosses over the 200. But nonetheless, here you have your ultimate support at around 44.69. It's trading obviously $3 higher than that. So this is B1 I would keep an eye on. And we're not even going to go through right now the momentum indicators, because we're going to talk about this as if nobody has those momentum indicators. When we get to some of the other picks later on, we'll bring them back. Another one to look at is Adobe. Now, Adobe is one of these situations where it has been up and down around this 50-week moving average for a while. And when it makes a retracement like it did here, check out the slope, positive. So after it breaks it, the next week it comes back, you wait for the second week, just like we wait for the second day. And look at what a nice tight stop you would have had. And you had a nice move up. And of course, we all know that we're not buy and hold. So you would have made your profits, had some kind of a trailing stop and been out. Had another opportunity here, broke down under the 50-week, slope is still positive. By this point, you would have had another big move. Now, this has been going sideways ever since then. And now look at it, is once again testing that 50-week. So this makes Adobe very interesting because one of two things we'd be watching for. One would be that this would break the 50-week and not recover for 2 weeks like we saw in these other scenarios. And instead, we'd start to see the slope break down or start sloping down, in which case all this consolidation could lead to a really good short. And you might be able to see this thing go down to 350. It is certainly possible if the market cannot catch a bid and stay firm like it's been up until the week that I'm talking to you. The other scenario, of course, would be that it holds here and gets back through 50 or 500, I should say. And now you've got the risk to this low to look at. If I had to put a gun to my head to say which direction I'd predict, I would probably predict down more than up, probably because I see the momentum indicators here. But remember, we're not really looking at that right now. So AMD is another great example. In this case, it actually, after a long, long period of time, and if we go all the way back, you can see this has basically been above that 50-week moving average since back here in 2018. So that's 3 years plus that this has been above the 50-week. Why is this significant? Because after 3 years, not only has it broken down under the 50-week, it certainly reflects the weakness in the chip market, number one. But number two is, would I go short right here? Well, we do have a lot of support at these levels. Maybe I would look for one more bounce potential, and see if this slope starts to get a little bit negative and see what happens next week. In which case, again, you have the opportunity to go short with a risk over the 50 in anticipation that after all this work, which kind of looks like a bit of a lopsided head and shoulders top, you might actually see a $30 move down closer to 40, which of course is when now we'd start to see that 200-week coming in. So these moving averages are important. They just, instead of waiting 5 minutes or 30 minutes or even a day, sometimes you do have to wait a whole week to see what happens on those weekly candles and the move and the actual price. So now let's go on to Amazon. Same thing with Amazon. Now, Amazon did have during the pandemic the break briefly under the 50-week, but the slope never went negative. And you can see it's had this long move up. But once again, Just a huge amount of sideways consolidation for such a big stock. Now, it might be super scary to even consider the idea of shorting something like Amazon, but if you know your risk, it shouldn't matter. And remember what they say, steps up, escalator down, right? So right now we're holding it. Could be a great buy opportunity. Certainly the momentum indicators are not showing that. And that would be probably, for me, a weekly close, or next week we take out this 33.50. But if that doesn't happen and we start to break down under this 50-week moving average, once again, you'll be able to use what the 50-week moving average. And after all this time in a $500 range, if it broke down $500 and went to $2,500, that would still be a really nice short. Now, let's look at something I feel a little bit differently about, but it hasn't set up yet. And this is British Petroleum. Well, it hasn't. So with British Petroleum right now, we've had a long period of time where we chopped around the 50-week moving average. Obviously, it broke down again during the pandemic time. And since then, it took out the 50-week, actually retraced to it, but the slope was still down. So really here was the better time to start getting involved. However, what we haven't talked about yet is the 200-week. So at the same time this is breaking out and holding over the 50-week, you're getting awfully close, within less than $3 or $4 actually, away from the 200-week. So in this case now, this is sort of a like, I'm interested, the slope is starting to move up in the 50. I have to determine my risk. Obviously, with British Petroleum right now, it's down on the day following the market, so you always have to consider the macro. But if it either holds above this 25 or starts to clear these highs, you could take a probe over 27, but really I would take a small probe and be nimble. And if it can get through this 200-week moving average, then you have something really to look at. Would I short this? Absolutely, but only now if it broke down under that 50-week moving average. Now, Cane, I've been giving you Cane forever, right? We've talked about Cane. And of course, all the commodities, like I said, are starting to have some issues today, probably because everybody and their brother jumped on the bandwagon too late. We always talk about, remember, you guys, we've been with this one for a long time. We've already taken a couple of profits. We have our trailing stop. But the bigger point is you always want to get in before the public, and you want to be taking your profits when the public finally gets the clue. That's the momentum you're looking for to be able to get out. So with this one now, we have the same thing, an inclining slope on the 50-week moving average. Still somewhat negative here on the 200. Remember, if you think about it as a train conductor, it takes much longer to get a 200-car train into momentum, and it takes much longer for it to break. It's much shorter if you're dragging 50 cars, and that's part of the reason. But nonetheless, this is now over the 200, which it hadn't been for years and years and years. And that tells me that you don't want to necessarily chase, but we're still in a strong uptrend. What I'd be looking for is some kind of move somewhere around 785, and that would be my situation to be looking at potentially as a good correction. And I know I said I was going to cover commodities later, but I really wanted to show you some of these commodities relative to their moving averages. And here's another classic example. We were in corn down here when it finally took out its 50-week. We're out of this now. Unfortunately, we missed this big move up. But now we're getting a little bit of a reversal pattern here with corn down pretty good today, Thursday, 4%. But nonetheless, let's not make the mistake that this is in a good bullish trend. So what we can see here is the 50-week approaching the 200-week, and you can give this some time. We get anywhere near 1750. That would be an unbelievable correction, one that would be very tempting to buy, knowing at that point where these moving averages are relative to one another. And if the slope, which is neutral here and positive here, change, then you would probably say, never mind. Now let's move away from that. This is a stock that we did This is a stock that we did very, very well on. We caught a big move up in this a couple of years ago, and I haven't really traded it much since. It's eHealth. But what's interesting me about this is that after you had this major down move, and this was after an earnings play, it's been basically trying desperately to come back. What's also interesting, by the way, is that this huge bar that it made just in this 1 week, we've never taken out from the highs or the lows. Now, yes, we have a negative slope here in the 50, but we have a positive slope here in the 200. So what I would be looking for, see, this is a situation where I would consult the daily chart, which I'm not going to do now, to see if it starts to show any signs of strength. I would say probably looking more like a move over 64 to 67. And then you can use that 200-day moving average. Would I be a buyer over the 50? Well, most likely not initially, because our slope is negative. What's interesting me about this is after this big move and the attempt to go up, this is either showing that it's going to hold a 200-week, or it could be another tremendous sign of weakness that we never were able to get to the highs of this bar. And now we're starting to turn down, and under the 200-week, it could even be a short. This is how flexible we have to be at this point in time. Now I'm going to show you gold. We have a position in gold. Gold, of course, has been chopping around with the market. But what we can see here, very interesting with gold, is we've already taken a couple of profit targets and we have a profitable trailing stop. But look where it stopped on this run up. It stopped right at the 50-week. Let's look at the slope on the 50-week. The slope is maybe slightly pointing up, a little bit neutral here. So that makes this really easy. After basing out here, and by the way, look, this time it retraced, made all the way up, broke it, now coming back to it. This opposite of e-health could be the ultimate sign of strength. But at this point now, I'd want to see a close on a weekly basis over the 50-week, and then some level of follow through over that 50-week the following week. And then I would feel really confident about not only getting along gold, but that the inflation players who've all scrambled into things that they're now getting forced out of wind up thinking, gold is a good buy, and we could actually see another leg up in that. I also wanted to add a couple of countries. I had talked to you about Latin America, I know, a while ago. Now take a look here at Latin America. Latin America, by the way, big commodity producing country. You could see the upward slope in the 50s. So here, look how nice that was. Even though the slope was negative, you could have taken a shot. But even if you missed all of this, it doesn't matter, because by the time the slope was positive, this price was up here and you were close to the 200-week. What matters now is it's taken out the 200-week and you can see a very neutral slope. So at this point now, we're working on a breakout. So again, interesting commodities play through an ETF that's a country fund ETF. If it holds 29, I wouldn't necessarily run in this week because everything can be impacted if we get a major sell-off. But if it holds next week, then I would say wait for some confirmation, like it gets through 30, 30, 10, use your 29 as your risk and see how much you can get out of that one. Another country is South Africa. Also a commodities producing country, very similar to ILF except for one thing. This already broke out and went from 44 up over 50. And now with the market is starting to show a little bit of signs of pressure here. In fact, as I'm talking to you, it's down almost 2%. But nonetheless, this would be another interesting one to keep an eye on because it did have a major breakout. Does it continue to move sideways? Does it sell off closer to, say, 45, 46? Then you have a good risk to under here. Or does it take all of this out, which would be interesting, like over 52.36, and then go from there? So these are all ways you can see these trend changes in the moving averages. So that's just a brief lesson on looking at them for longer term moves, especially like I said, if you tend not to be a day trader, but you're looking more for position swing trading, and particularly if you're looking to go short in a market that could be heading for another major leg down. All right, let's move over now to some earnings plays because there's a couple of ones that are interesting to me. Nobody's really yet given up on the idea of an infrastructure package. This is American Tower. They're big on 5G. And as such, now we're looking here at the weekly moving average. For the rest of these, what I'm going to do is I am going to switch to the daily chart. But what's interesting about this is you can see it's over the 50-week, and that's a pretty good sign. But let's go to the daily now so that we can talk more actionable, more shorter term. So the reason why this struck my interest is because right now on the daily chart, same thing. It's a 50 and it's a 200, but they're daily moving averages, obviously. And we can see here that this is a golden cross. So this also took out the 50, then took out the 200, made its nice move as retracing. What we'd be looking for here with this golden cross is when you get a price close to the major moving averages, then what you can see is a very good tight risk in kind of an expensive stock. So I would keep my eyes on maybe a move down closer to 237 as one possibility, or if it holds here, you could either use the moving average or under 240, but I would wait now to see some level of strength, probably a move over 245 to 247. So that's one, if the market holds up, I like. I wanted to give you Disney because that actually reports Thursday night. And so right now, of course, it's going down with the pressure of the market. But look at this. We also had a breakdown under the 50-day moving average, which is now starting to slope negative, and we've broken down underneath all this support. So unless we get some killer earnings report, and if we do, if it gets to the 50 and can't clear it, you might have an unbelievable short against that. But if it can't and this gap's lower, then you're going to look at these recent lows here at around 178, 179, and you might even have another short opportunity to see what happens as it gets closer to the 200-day moving average. You can see here with very little that I'm interested from the long side, except for like gold, silver, maybe American Tower, maybe some of those country ETFs that are commodity related. Now I'm giving you Teva because Teva also reported, and it's really choppy. I'm not actually a big fan of this action right here, chop, 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 but you do have a good amount of risk here to 995, and it's been trying intraday to get over the 200. So what I would say is that considering it's holding the 200 in real motion, so now we can bring in our indicators, we're seeing a little bit of a divergence in momentum positive. We're also seeing an outperformance here against the benchmark. So that makes it easy. Two closes over 1050, clearing that 200. You can have a choice of risks, either to 995 if you wanted to hang with it, or to the low of the day that it clears the 200 and closes above it, giving you a much tighter risk to see what happens once it gets closer to the 50-day moving average. So keep that one on your list as well. DDD, which had an incredible report, of course, is also feeling the pressure of the market. But you want to talk about great technical analysis here. I was being asked on Twitter this day, is it a buy? And I said, why would you buy something right ahead of a negative sloping 50-day moving average? Duh, here we are. Next day was an inside day. Now we're breaking down under this low. Now, the other thing that's interesting here is if you look at your 200-day moving average, you had a reversal pattern against it. This was a new 60+ day low, gapped up the next day. That means this low right here at 1747 with 1723 really close behind is a number to keep in your mind, because if this sells off with the market but doesn't take out these lows and holds and starts to show some sign of strength, momentum would be nice back over the Bollinger Band. That's when I would say, DDD might be ready to go counter the market. Another one is in the cybersecurity space, which is Leidos Holding. Now, this too has a nice slope in both, and the momentum indicators are decent, not amazing, but decent. And yet, of course, with the pressure of the market selling off, but getting an inside day on the day that I'm talking to you. So to me, if this holds 100 and clears the high of this day right here, 104.27, I'd probably give it a little bit more room to say over 105, but from there, as a cybersecurity industrial defense stock, even if things continue to get ugly in the Middle East, or we get some kind of other level of cyber attack, or whatever happens, you actually have a situation here where you can now be looking at this stock. Capri is in the retail sector. It's Jimmy Choo and Michael Kors. And look at this. thought this was such a hot stock for a long time, and now we got one close under the 50. We may get another close under the 50. The slope is still slightly positive, but if you get a weekly close under 52.50, you can risk 250 on this, which is not a lot for this stock, to see if you can make at least $5 down to 47.50, which would be these March lows, or maybe even lower, more around 44.45. So I hope you're getting some good short ideas here and writing them down. Now, let's just go to some of the commodities that I wanted to cover that I didn't. Here was UNG. So this is the 200-day moving average. So this is also kind of like the 200-week, only more shorter term. This has been consolidating here. The momentum is still decent, and it's actually in divergence because it's over the 200. But at this point now, what would you do? You would wait for a confirmation for this to clear through all this consolidation with a 2 days close over 1087 or over the 200. So that would be another one on the commodities realm that I've been watching. We're already in, looking possibly to add. And silver is another one. So silver is also having a little bit of issue with the market, but is definitely outperforming here. Momentum, you can see, is not as strong as I'd like it to be, but it's certainly been a leader. And now we're looking at this over both moving averages. So what would we do here? Well, first of all, we would say this isn't a bullish phase, so don't let anybody tell you differently. The slope is starting to accelerate a little bit to the upside. So if we start to see this 50 turn up a little bit, and we start to see this clear some of these more recent highs, say 25.50, I think you have an opportunity now to see if silver's got a lot bigger legs, just kind of like what I showed you with gold and its 250-week moving average. And two more. I also wanted to show you coin, because coin is obviously tied to the cryptocurrency space, which is getting a little bit hammered today. But this had a legitimate reversal pattern with a new 60+ day low, inside day, and then a breakout the next day. So if this can get into an area anywhere between 257 and 260 and hold, and again, then start to show some sign of strength, maybe get back over 267, 268, then that might be a situation where we don't have any moving averages yet because it's a new issue, but at least you can use the 250 level. And I still want to keep my eye on that crypto space. And finally, let's look at the agricultural ETF, DBA. So this too, I've been bullish this, my God, those of you who follow me know, for a really long time. Obviously, if I were long up here, I'd be taking a profit today because of this big sell-off here, leaving this sort of topping pattern. But again, big slope positive on that 50. We get anywhere closer to 18, maybe even somewhere between 1770 and 18, it gives you a nice retracement to look at. And especially if real motion continues to hold above the 50, that would also be a good sign too. So at this point, I wouldn't do very much, but I'd be looking for a further correction down to about $18. So I hope if you put that all together, you see that we've got weekly moving averages for major trend changes. We've got some interesting earnings plays that could turn out to be good buys or good shorts. And then we still have some interesting commodities to look at, particularly silver and gold, if they continue to outperform the rest of the market. Okay, go buy my book, Plant Your Money Tree, and I will see you all next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.